We couldn't have had a better panel for a session like this, which looks at reassessment. Is it time for reassessment for LNG, given the changes that have happened around the world? This panel needs no introduction. All of you know who these gentlemen are. They have been in this gas and LNG industry for a very long time, and they bring deep expertise and understanding of the sector like none other. So, I'm going to begin by saying that, the title says it's time for reassessment. Well, it is certainly time for reassessment. Look at what has happened internationally, not the least. And everyone talks about prices and where are LNG prices, and, they've gone to this level. Somebody comes and says, oh, they're going to be here forever. Somebody says, so different views out there. Now, what time has taught us all is that, nobody can predict prices, whether it's oil, whether it's gas, and there will be different circumstances every time. There have been times when prices have been really low, there have been times when prices have been really high, and it keeps on changing, and there are a lot of factors that impact. I think what is important for everyone to understand is what are those factors that actually drive the gas and LNG world. There are buyers sitting here, there are sellers sitting here, and there are other industry participants. For them, it's important to understand that how they look at the market, and therefore how this market might change in future, and what are those key and important parameters. So with that, I'd like to begin this session, first of all, there are a number of changes, right? So the short term, of course, is very important. Everyone looks at what is the price today. You wake up in the morning, you see the price. 2 months ago, it was $80 a barrel in Europe. It's $40 a barrel, for an MMBTU, sorry. $80 an MMBTU in Europe. It's $40 an MMBTU now. So let's talk a little bit about the current prices and what's driving that. I'd like to request Dr. Balyan to maybe begin and give some opening remarks and talk a little bit about what has impacted the LNG prices. There was COVID, and then suddenly COVID was over, and then there was suddenly demand surge, and then there was Russia-Ukraine. So can you share your thoughts on how this all has impacted the global LNG world, how this has impacted the buyers today, and how should the buyers look at this immediate market? And what are your thoughts on how this winter or next year would be for the spot market globally? Dr. Balyan, please.
Yeah, thank you, Gurpreet, and must thank the ETEnergy for inviting me for this wonderful conference and this particular session. It's a very difficult question, Gurpreet, predicting price and trends and all. But then I think we all should realize that the COVID period was more than 2 years, and the industry suffered quite a lot. And if you really see all sources of energy, actually we found that the investments were very less during that period. And once we were sort of coming out of COVID, the growth picked up, economic growth picked up, the energy requirement picked up, and we saw that all kinds of sources of energy the prices were very high. And there was an availability issue, there were kind of a disruption on that. So it's not that only gas, but I see that all energy sources were under pressure in terms of availability. And many places we saw that the countries and companies were looking for different sources of energy on that. When we talk about gas, actually, we see that some of the evolved markets like Europe and USA, they set the trends actually and impact the world's availability of gas and this thing. So we saw that the entire scenario just after the COVID, the Ukraine war, this all actually led to some kind of a disruption of supply because of political reasons. We all know that the Russian supplies were sort of disrupted, and then Russia stopped this thing. So if you see the kind of a simple mathematics, the Europe used to get about 150 billion cubic meters of gas per year, and this from Russia. and this came down to just about around 15 in no time actually. And therefore there was a shortfall of about 135 billion cubic meters per day per annum, which translates to about 100 million tons of shortage in few months' time. So this was a great sort of a setback and a deficit of energy. And for that, most of the LNG from America, USA, was actually diverted to that. Plus, there were many other contracts that were impacted on this. And Europe imported about 137 billion cubic meters of gas from this year, from January to almost October last month. And this is about 40% more year to year. Also, there was a kind of a tendency to bring in and fill up your stores there, storage, this thing. So I think that was, so what happened is that this disruption has impacted the world overall. The supply chains also impacted the pricing. And we see that impact in Asia also as well on this. So one was the kind of the gas availability and impact on the supplies. We saw, because of this disruption of supply, the pricing was impacted. And we saw some unprecedented pricing. This thing, as you said, the price in August and September touched about $80 a million BTU, unprecedented. We never seen in the history of LNG business such prices. In India, I remember when the oil price went about 140 and all, the highest price cargo was $22 a million BTU in India. And we thought this is something unusual that has happened. But this time, I think world over, these prices have broken the ceiling. And we have seen that the TTF hub for the gas was trading about $90 a million BTU. The JKM was about 68, 70, that range on this. And the Henry Hub also was all-time high, about 9.8 to $10 a million BTU. This was an unprecedented kind of a thing, and very high on that. So from the pricing point of view, while we see that there is also a tightness in supply of LNG, but because the storages are full in Europe, and there are certain other production coming to that, we see that subdued market demand in Asia also. The prices might ease over a period of time. So I think some of the projections that they say that the European price may be ranging about $30, $35 a million BTU, which may transition to 23, somewhere around 20, 25 range BTU. The Henry Hub may come around to, is already around, actually around $5 to $6 a million BTU. So I think over a period of time, but it's going to take time to transition to a lower range in 23 and 24. So coming back to before this kind of events, disruption happened, it is going to take time for pricing to come back to that. Yeah.
Thank you so much, Dr. Balyan, for explaining so clearly the reasons for what we are seeing today. And I guess, what we heard is there was a time of COVID when investments were less, and then suddenly there was a time due to the Ukraine conflict when demand went through the roof because of Russian supply reduction. So in other ways, in other words, perfect storm for LNG buyers when suddenly there's no investment and demand has gone high, leading to a kind of break, these prices that we saw. Also, I think, good to hear that reassuring words that perhaps over the next 3 to 6 months, the prices may not go back to the levels we saw in early autumn, and perhaps they're likely to remain here or go lower. So thanks for the opening comments, Dr. Balyan. Next, I want to come to you, Sumitji, and I want to maybe ask you about buyer preferences in this LNG changing LNG world. There was a survey earlier in 2022 of buyers globally, and that kind of pointed to the fact that last 3 years the long-term volumes were reducing and spot was rising as a energy mix. But suddenly in 2022 beginning, that trend changed and buyers started looking more for long-term volumes. Even as you may be aware of the recent contract, 27-year contract that has been signed for LNG. So what are your thoughts on, how do you look at it? How should India look at this whole long-term, short-term spot mix? What would be a sensible way of thinking about, the LNG procurement that India has to do and, going forward in this scenario?
A perfectly framed question, Gurpreet. I thank you for raising this issue because as GAIL, we are a portfolio player and we have always been recommending our customers that try to tie up maximum at least 80 to 90% of your requirement in long term. However, there have been quite a good opportunities for the customers in recent times, past few years, where the spot prices were sometimes much lower than the term prices. And it actually diverts the minds of the customers and they are actually lured by the low spot prices and the tendency of buying spot increases. And actually, the international data also supports this fact. I just checked in today morning what was the spot percentage, and in 2010, the spot overall LNG traded terms, the overall spot percentage was only 18% in 2010. I am talking about 12 years ago. 2020, when the spot prices were extremely low because of the COVID and other economic recession, all those factors, the spot had jumped to 40%. And then come 21, the spot started declining, and 21, the spot percentage in international trade was 36%. Now the 22, the hit on the nail when the spot prices started rising because of various geopolitical issues. During May, June, the spot percentage had come down to 29%. And very recently, during September and November, the spot percentage has come down to only 18%. So this is the phenomena playing out in the international market. Obviously, Asian countries, China and India are also going through the same mindset. What happens, a spot buyer gains, sometimes he may be gaining a lot of, every month he may be gaining by $2, $3, this kind of things. But what has happened in the past also, when the market changes for the reverse cycle, all the gains done in last 2 years can get wiped out within a month or 2 months. And this time the pain is even more severe. Some of the industries maybe who are not having any planning for a longer term, they are under the threat of getting wiped out because they don't have any gas arrangements. So our genuine recommendation is always to go for a long term, especially when it's a process plant. For example, the fertilizer plants, they definitely require natural gas for their production of urea. And process plants actually need that. First requirement is availability of molecule, which is primary. Second comes the price. So energy security, what we say, the availability molecule is much more important, and such process plants should definitely go for at least 85 to 90% of the requirement on long term. Then comes the other sectors like power sector. Power sector, the story is slightly different because in power, there are various options of generating power. There are renewables now, coal and so many other fuels. So probably they can look at the whole situation with a different mindset. If the spot prices are low, some of the power plants may consume more gas. If the spot prices are high, they have other ways of generating power. So the story for power is different. As far as other industries are concerned, we are definitely seeing many of the industries having other options. Many are actually switching to liquid fuels in these high spot prices. Liquid fuels, when I mean it's propane, LPG. Morbi is a perfect example where the tile manufacturing hub is there. It used to consume around 7.5 MMSCMD of gas till last year, but with the high spot prices, now many of the customers have actually switched over to propane and LPG. This may be a short-term phenomena or a medium-term phenomena, but these customers have developed other options. And going forward, we actually see degrowth of gas consumption in the Indian subcontinent. Degrowth has actually happened in China. If you look at it, the consumption of LNG in China, it was rising in last 3-4 years. This year, 22, the data already speaks that China is going to consume less of LNG by at least 22 million metric ton, which is a substantial drop in LNG consumption. China, again, is a slightly price-sensitive market. Of course, they are having COVID and other economic recession type of issues also being faced in the country. But even in India, there will be degrowth this year. Certain industries would switch to other options. Maybe they will come back after 1 or 2 years when the prices come back to some near normal. Regarding new investments, wherever new investments were getting planned with respect to consumption of gas, I think because of the high prices, those investments may get a slightly delayed planning, maybe by 6 months or 1 year at least, for the prices to sober down. 23 is going to be a challenging year because nobody knows whether the tussle between the Russia and Ukraine will settle or not, whether Europe will start getting piped gas or not. If the things continue the way they are, the moment winter is over, Europe is definitely destined to start hoarding molecules, natural gas molecules, for the next winter, which is the 23-24 winter. And there is a high likelihood that prices may remain very high during the coming summers also because of this phenomena, which was seen in 2022. Of course, the political scenario may change all of a sudden. Nobody knows about it. So all said and done, yes, long-term buying is going to come back. And definitely for the sectors which have visibility of consumption, they have a stable consumption requirement, they will definitely go to long-term. But the main issue is long-term is not available in the international community right now because none of the international sellers are willing to give long-term for 2023 and 24 because they are also wanting to make money in the market by selling in the spots. So long-term would be a trend coming back definitely, maybe starting from 25 or 26. And people are already, as Gurpreet mentioned, this news made headlines that Sinopec has done a 27-year deal. We may be hearing similar deals starting from 25 or 26.
Thank you. Thank you for your inputs. I think, a key takeaway for me is the strategy perhaps needs to be buyer specific. So, process industries have a different strategy or should follow a different strategy. Power sector should perhaps follow different strategy for different reasons. Thank you for your comments and, some concerns as well highlighted there where you talked about the growth not being there in India, at least in the next year. Which brings me to actually my next question very nicely. Where I would like to request Mr. Majumdar to come and share his perspective. And Mr. Majumdar, what I'd like you to talk about is this whole concept of 15% of primary energy mix, that natural gas needs to be 15%. It's an ambition that has been stated many times for quite some time now, that India needs to reach 15%. However, the question is, will it reach that 15%? Does it need to reach that 15%? Given all the uncertainty that you've heard around international prices, what it means, and limited domestic resources that we have, reliance on LNG, our reliance on LNG increasing. How do you look at this concept of this 15%, and how do you reassess this? So if you have to reassess, how do you reassess the market? How do you look at consumers? What do you think the policymakers need to keep in mind? Let's not forget that at the recent COP as well, India has still gone ahead and unveiled our long-term LEDs, LEDs. And those long-term LEDs also talk about natural gas and a share of 15% as a desire. So it's an important target that government has continued to maintain, that they want to reach this 15%. The question is how and is it possible? So your opening comments, Mr. Majumdar, please.
Thank you, Gurpreet. First of all, I'd like to thank ETEnergyworld for having me in this esteemed panel. And that was a long question and a complex one. So I'd like to answer in segments. First of all, when we look at LNG and when we look at LNG market and the way the market behaves, there are practically two aspects of it. One is that it is a marketplace. People have come here to make profit in doing their businesses, irrespective of the sectors. And the second is there is some forward-looking vision and policies and mandates of the government, wherein we set to usher us, India, into the path of decarbonization. Now, these two often become conflicting because as an evolving economy, while our desire is to increase the use of energy, at the same time we tend to look at lowering our carbon footprint. So this is a conundrum. And that is why natural gas, that is why LNG acts as a perfect bridge fuel as of now to take us to the ultimate goal of net zero. Now the way LNG market is behaving and why it is behaving, that first need to be understood to answer the subsequent parts of the question. Roughly speaking, we import 50% of our requirements through imported LNG. And it has been, India has traditionally been and will always be a very, very price-sensitive market. And LNG had actually fitted in very nicely because of the low prices at which it used to score over the other fossil fuels. And that was particularly because the emerging trend was of increasing gas use. And what we found was that though we had an all-time peak high production, domestic gas production in 2011 of around 33, 34 TPA, but it subsequently got down, and in 2021 we were somewhere close to around 20, 21 TPA. The balance has to be always imported. Now, there was a very peculiar trend, which Mr. Sumit has explained nicely with a lot of data, that between 2016 and 2020, if you look at, you would see that the buyers all over the world would have preferred spot over the term contracts because of its obvious price advantage. But the market completely reversed over the last 2 years. And now the spots are at an all-time high, and the suppliers are not willing to provide a long-term contract. Under the circumstances, my imported LNG price has gone up to an extent that in very many sectors, they have become unviable. For example, if we take the power sector, if my cost of gas exceeds $8, then the end price that can be calculated would not make it feasible to the end users. But at the same time, our policy, our mandate, our vision towards net zero suggests that we will lower our emission intensity by 45% in the next 10 years. And if we ought to do that, then at least 30 to 35% of my thermal plants need to be run on gas. If this is the scenario, and we know that this particular sector, say power and fertilizer being, which accounts for over 70% of use of LNG, coming to power first, it doesn't have the appetite to absorb the volatility of the market. But we necessarily will have to find a way to look at how this market, this particular sector, can be provided a scenario where it can use LNG. And there are other mandated sectors like CGD and CNG for domestic and transport sectors, where of course our domestically produced gases are finding a way. In fertilizer, it is again a very, very big concern because in the last 1 or 2 years, our fertilizer subsidy for urea has been in excess of 1 trillion rupees. And this creates a huge impact on our current account deficit. It creates a huge impact on our economy. and we are largely dependent on imported LNG. If this is the scenario, then what is going to happen is if there is this price volatility, which we cannot address in any other way, then my fertilizer subsidy is going to go higher and higher. And ladies and gentlemen, we ourselves have to spend from our pocket because government subsidy comes from us only. So there has to be a strategy for it to relook and reassess how this sectoral balance can be made. So from a consultant's perspective, the way we look at is one of the sectors which can very nicely absorb the volatility of high prices of imported LNG is oil and gas sector. And in oil and gas sector, when we speak of the refineries and petrochemical complexes, nowadays you would see all the refineries are being converted to integrated complex, wherein we are also producing petrochemical products because there is an ever-increasing need of petrochemical products in our country which we cannot really suffice. Now we are dispensing off with the captive power plants. No new refineries or no new large oil and gas plants are using captive power plants. They are relying on grid power. This grid power can be made through LNG because the end user being oil and gas sector has the ability to pay for the volatility. And also, we are looking more and more at the bottom of the barrel or residue upgradation, which requires more use of hydrogen through hydrogenation process in order to create the building blocks for petrochemical. So we are looking at more hydrogen. Hydrogen generation traditionally in refineries has been through LNG. We create the blue hydrogen through LNG and then using the carbon capture and sequestration. All this thing can actually very nicely put LNG in a perspective of oil and gas, wherein the power sector can also charge a higher tariff for the industrial use. The LNG, of course, has another advantage that it can displace the liquid fuels. And the liquid fuels like naphtha and kero can be then transported to the crackers, and we can create the building blocks of petrochemicals. So in a way, I could see more LNG being used in the oil and gas sector and for the power sector in order to serve oil and gas sector. However, in case of fertilizer, where we are having this subsidy issue, the high price of urea, we should look into balancing it by some inflow of the domestically produced gases in order to balance out our high cost. And that can only happen if in the mobility sector and in the domestic consumption sector, we reduce the use of the domestically produced gas. And that can always happen by the electrification process through green hydrogen and other and renewables and other areas. And this is probably a kind of balancing and providing us intersectoral subsidy, which is going to create the balance to cushion out the volatility of the price of imported LNG.
Thank you, Mr. Majumdar, for a very comprehensive coverage of all sectors and your thoughts on how we can look at consumption. You did talk about power tariff for industrial purposes. And some would argue that it is already so high in India, power for industrial tariffs, and we're talking, we're trying to say that they can pay even more. So I guess it's, these are no easy answers to this. I guess, we have to think through. But I think the most important point you said is LNG is a market, and it's been said to be a market. So in a market, some people will make money, and the others have to basically figure out how to manage the consumption, given that it is a market. If we can just support the creation of a market further, I think to me that helps both consumers and buyers. And interestingly, we have a session coming up from IGX after our conversation on gas markets. So we look forward to that. But thank you for your comments there. Next, I want to move to Mr. Ashim Sharma, and I want to focus on just one segment of demand which has not been talked about till now. It's about the potential for LNG as an automotive fuel in the heavy-duty vehicles segment. As I'm sure everyone knows, Government of India had announced a plan that there'll be 50 refueling stations set up across the country, which will provide the LNG availability. So my question to you is, how are you seeing this ecosystem develop? Are you seeing enough pace? Is it progressing at good pace? Or if not, what are the challenges you think in the LNG for trucks, and how do you think these challenges might be removed?
Thank you, Mr. Gurpreet, for that question, and I'd like to thank ETEnergyworld for also inviting me to this panel. Well, I think LNG for heavy trucks, it's been something, and for also long-distance buses, has been something that's been discussed for many years now. You talked about this 50 stations that were to come up. Well, as things stand today, not many have come up in the country. There was clearly an advantage of using LNG in terms of total cost of ownership. With the recent increase in prices, of course, some of that is getting eroded. What we see is that if this is to happen, three actors need to come together in close coordination. One is a logistics service provider who has assured loads on two ends of a leg of travel. Of course, somebody who can set up these stations. And third, and very importantly, also an OEM who's able to provide vehicles that fit the use cases that these trucks are going to be deployed for. That currently has not happened because all three have not come together. So even if one arterial highway in India was chosen and this was done, it could really, kick off this kind of a revolution in terms of gas in trucking. There are a lot of inherent advantages of doing this. Not too much modification is needed in terms of the vehicle, and it is possible to localize large percentage of the components other than maybe the cryogenic tank, which currently would still be imported. But apart from that, it is also a pilferage proof fuel because it's stored at minus 162 degrees. Also, there is lower noise. There is also the advantage of it being greener than use of diesel. Now with the hike in prices of diesel, but at the same time, there's also been a hike in prices of LNG. So some of the cost advantage has got eroded, but overall, there is clearly this potential if a large LSP, an OEM, and somebody who can set up these stations comes forward. The other aspect could also be for interstate buses, where a large part of these fleets are owned by the state transport undertakings. So not so much for city buses, where CNG is good enough, but when you are looking at long-distance flying of these buses, again, that's a market that is waiting to be tapped. I think if these two segments do take off with LNG, even if it starts off with small pilots, clearly the cost per ton kilometer or the cost per passenger kilometer is going to be lower, and we would see a lot of adoption happening at a fairly fast pace across the country. And that could sort of move our trucking and busing into the gas age.
Thank you. Thank you for your comments. I think you clearly identified that there are tech advantages that are to be had by using tech and environmental advantages by using LNG as a fuel for heavy-duty vehicles. Also, thanks for pointing out the importance of logistics service providers and, of course, the other two actors, all of them needing to come together to make this a success. And perhaps, as you said, a long pilot is a way to go where it kind of establishes trust in the whole value chain. Thanks for those comments and feedback. I'm going to go back to you, Dr. Balyan, and I'm going to maybe, in the interest of time, skip to the question that I want to ask you is around carbon neutral LNG. And this was something that Mr. Majumdar also talked about, that we are looking at decarbonization, and we are looking at decarbonization of the oil and gas value chain. Now, in LNG world, there is this new concept of carbon neutral LNG. So, can you talk a little bit more about it? How does this work? What is the experience of the market with this carbon neutral LNG? And how do you see this as a product in the market over the next, say, 5 to 7 years, and what role it will play?
Yeah, Gurpreet, I mean, that's a new emerging sort of business, I would say. We all should recognize that the world is actually impacted greatly by the climate change aspects on that. And oil and gas sector particularly, the energy sector is considered highly polluting. So I think the energy sector, oil and gas companies are also very dramatically impacted by the climate change, and everybody is trying to really reduce the carbon footprints and see what kind of decarbonization processes can be adopted in that. So in the LNG business, what is happening is that the impact is coming. How do you reduce the carbon footprints and be a carbon neutral organization? So what is happening is that when the LNG trade happens of a carbon neutral LNG cargo, so what is done is that the buyer and seller actually agree to offset the carbon footprints by way of processes that are defined under the greenhouse gases emissions strategy, and this through a verified emission targets. So the offset is through afforestation, creation of greener avenues where you capture the carbon dioxide, largely on the afforestation, and maybe carbon capture on that. So when you do this and implement these processes, it is definitely additional cost. So what is happening is that the carbon neutral LNG is made available by some of the producers, which is seen as a differentiated premium product and slightly higher priced than the normal LNG. But the buyer also has the advantage of really reducing its carbon footprints, so would be ready to buy that. So we see this trend. The first cargo was sold somewhere in 2019, and we see that the number of cargoes now, it's about, I think, 30 plus cargoes have been sold, and we see that this trend is increasing in that. So what is happening is that some of the LNG producers are looking at how do you decrease their carbon footprint, and some of the major producers are trying to capture the carbon dioxide in the process of right from the upstream production, transportation, liquefaction, transportation for regas, and regasification, this thing, and up to the end use. So what they're trying to do is that they're trying to capture during the liquefaction and at the selling stage all the carbon dioxide and capturing it and making it use there. So it is CCUS kind of a project. For example, Qatar, I know, they have a project of capturing about 2.5 to 5 million tons of carbon dioxide per annum from their north field, east field, which is now coming into production now. And they would be in a stage of selling a carbon neutral LNG cargoes. Otherwise, Shell is perhaps the leader in this thing, and I see this trend happening. So there would be also, over a period of time, I visualize that this market would grow. There would be voluntary carbon credits available. There could be even partial offsetting possible. So there, I see that partial offsetting, fully offsetting, carbon neutral cargoes, these things would grow to my mind. And major players in this field are taking action on this. Also, we should be conscious that markets, bigger markets like Europe, are putting carbon taxes. So anything that comes into Europe, including LNG, would be taxed if this is adding to carbon footprints. So I think there is a trend, although the volumes are not so significant in terms of the total LNG sold, but I think the trend is growing on this. And I see this will grow, albeit not that faster rate, but as implications of climate change and the desire to have a check on the carbon footprints increases, this part would grow, to my mind.
Great, so fascinating to hear your words on this, and I'm sure a lot of you already know, but data suggests that until beginning of 2022, there were already 35 LNG cargoes, carbon neutral cargoes, which were sold around the world. In 2022, much more perhaps would have been sold, and data would come out soon. But I think great insights there that this is a market which will continue to grow, carbon neutral LNG. The LNG suppliers are adapting to the change requirements in the world. There will be a premium, as you said, and perhaps that will be driven by the cost of carbon capture. And if LNG cargoes are going into Europe and they have to pay a CO2 price, which is touched $100 a ton, that's the incentive for any LNG supplier to already invest money in carbon capture and try and match that price with a zero carbon tax on those cargoes. Thank you.
Just to add on, Gurpreet, on this, one cargo of about a typical 175,000 cubic meters would mean about 250,000 tons of carbon dioxide, actually.
250,000 tons of CO2 at $100, price.
So it is a major carbon footprints, So I think what is happening is that the world is looking at a kind of a common, acceptable framework for this. And I think two of the leaders in the field, Pavilion LNG, and I think I'm forgetting that other name, Wood Mackenzie. They are working on developing a framework for this carbon footprints reduction system for carbon neutral LNG to come into this thing, which would be acceptable to all the buyers and sellers and all. So there's a lot of things happening in this.
Thank you for your inputs. Next, I'll come to you, Mr. Majumdar, remaining with the LNG world. And my question to you is about the LNG regas terminals. And the context is that, we have now seen Germany has just commissioned a new FSRU, 5 BCM per annum, possibly can go up to 7 BCM per annum, in a record 194 days. 194 days from start to setting up and being ready to receive LNG. Of course, it's been driven by the current situation in Ukraine and their reliance on Russian gas that they want to go away from. But it opens up a very interesting possibility of setting up FSRUs, which are exceptionally flexible, which are quick. Compare that to a regas terminal, land-based, easily takes 36 months, even longer to plan. So many terminals have been planned in India for such a long time, not seen the day of light. So my question to you, Mr. Majumdar, is how do you see an FSRU versus a land-based terminal? What do you think India perhaps can draw from this learning? Do we need speed? Do we need land-based? How do you look at this whole picture of land-based versus FSRUs?
Yeah, thanks, Gurpreet. The scenario of Germany making a FSRU in record 6 months was actually out of the compulsion, because right now, out of the around 640 odd LNG vessels which plow around the world, 60 of them are diverted towards Europe. And they are unable to offload their gas because there is not adequate storage capacity. About 93% of the storage capacity is already full. That's what I read of a recent news. And that is traditionally because the European countries, which requires a lot of gas in the winter months, they were primarily dependent on Russia. And because of the sanctions, now US has stepped in and US Gulf has sent all these carriers. They have got stranded. And this increased the inventories. This has pushed down the price. And this has also, as Mr. Sumit has said, not making LNG available to others like us. And this is one scenario where we need to understand the requirement of the infrastructure for storage and regas, how important it is. And that is the reason why we should take a cue from this present crisis in Europe, because India also can be subjected to geopolitical crisis at any possible time. And we should be able to create that regas facilities in a way that when my demand increases, because I am looking at incremental 6 to 15% use of energy basket by gas. And if that happens, then by 2025, 27, I am looking at something around 170 MMTP of import. So that kind of a regasification need to be there. Presently, we are having 32.5 MMTPA terminals. And also there are 2 FSRUs coming up with a combined capacity of 5 and 6, that is 11, at Jayagarh and in Gujarat. Now the fact remains that FSRUs have a definite advantage, the advantage of price and the advantage of time. Of course, land is a very big availability near all the major ports. Recently, government has mandated that in all the major ports, there has to be they will be planning a LNG terminal. But there are many ports where you don't have the required land parcel. FSRUs have the advantage of having a prototype design based on a capacity, so you eliminate the design phase of the project, design and engineering phase. It can be made at a fabrication yard under controlled environment, so your construction and fabrication time can actually be speeded up. And it is a plug and play kind of a mechanism. It can be either on a rig or it can be on a vessel. If it is on a vessel, it can be moved straight away, it can be docked straight away in any port. Otherwise, it can be moved a little away. And the fact remains that when in that particular place, the demand ceases, it can move to another place. And at the same point of time, you can fabricate many of them. So we do see that a lot more FSRUs are going to come because the demand in gas economy will not be stagnant. They will go up and down. And people still need to make money when the gas prices go down.
Right, thank you. I think that's very important, that flexibility is the name of the game when it comes to the new order of the LNG world. And the more flexibility you have in contracts, in infrastructure, it reduces the risk that you are taking. So thanks for those inputs. I'm going to come to Sumit ji next to you and talk more about the closer home. We've had a committee review the gas pricing, the Kirit Parikh committee. And they've come up with some draft recommendations around gas prices for domestic gas. What are your thoughts about that changes that we are seeing or likely to see in those gas prices? How do you think sellers and buyers are looking at this change?
Recently media reports suggest that the Kirit Parikh committee report has been submitted. Yes, the APM gas price, the domestically produced gas, which is generally produced by the national oil companies, namely ONGC and Oil India Limited, there has been a suggestion of floor of $4 per MMBTU and a ceiling of $6.50 per MMBTU, and the ceiling is proposed to be increasing by 50 cents every year. So this is as per the media reports. Yes, definitely, I think it sets a very good trend because the committee would have struggled with two major issues. The domestic gas production has been coming down, so sufficient incentivization has to be there for the producers. What we saw during 2020-21, the domestic gas prices were as low as $1.79, and where the producers were not even getting the price which is required to break even their costs of production, which is a very disheartening thing, because of that might have, nobody will be able to say this, but that might have led to a decline in investment which is required to maintain the production, not to talk about increasing production. So the floor is adequately covering the producer aspect. The ceiling, obviously, domestic gas is generally allocated largely to the CGD sector, where it's going to the public at large in terms of transportation fuel in CNG and domestic fuel for the kitchens in terms of PNG. So there is a competition when these, on one side the government has allocated GAs through PNGRB to most of the country is now licensed to GA holders, and 98% of the Indian population is covered with the bid out entities, where these entities are trying to lay the infrastructure for increasing the CNG and PNG proliferation. So there is a sector which is growing. It was growing very nicely in the last 2-3 years. The momentum needs to be continued, and probably with that angle, a ceiling of 6.5 does help the sector in terms of competing with other fuels, because they have to enroll new customers, they have to convince these customers to switch over to gas, and that incentive needs to be there for those customers also. So that way, I think it's a good balanced way for producers as well as sellers. Another thing which has been recommended as per media reports in the Kirit Parikh committee is the HPHT gas, where there is a ceiling right now. Though the HPHT gas is supposed to be having marketing and pricing freedom, what has been said is this freedom will, but there is a cap on this ceiling price. Currently it is 12.46, and maybe in coming years it will be something else. But this ceiling is also helping in a way to cushion the requirement of the Indian buyers, because the international prices are extremely volatile and extremely high. So whatever quantity of HPHT gas is available to these buyers, it's helping them cushion out their overall price basket. This HPHT has been recommended to continue with the ceiling for another 3 years, and starting 1st of January 26, the ceiling is supposed to go where these prices would be largely market driven. This is as per the recommendation of the committee. Of course, these recommendations have to be, cannot be considered sacrosanct. The domestic gas pricing has to be approved by the government of India, and the government will have the final say on it.
Right. No, thank you. And I think, clearly what we are seeing is that there is a direction, which is that we need to go towards market-based pricing. Certain time has been given to reach that, both for domestic gas and HPHT. And in that interim, your views basically suggest that it's kind of covers the buyers as well as sellers with a cap and a floor. Thank you for your comments. I have one last question. I know we are running out of time, but I have one last question for you, Mr. Sharma. And that's around, again, we can't talk about gas now without talking about carbon neutral and decarbonization. So in that context, hydrogen, we had a previous session on hydrogen, and people were talking about hydrogen as a fuel. Now, specifically looking at LNG and HDV sector, do you see hydrogen as a fuel for heavy duty vehicles? Do you see that as an immediate fuel, or do you see LNG in between and then a transition towards hydrogen?
Yeah, I think that's a question that comes up in everyone's mind. So is it going to be a leapfrog to hydrogen, or are we going to go LNG and hydrogen? Well, if we look at the hydrogen value chain, and particularly also with regard to trucking, of course there are 4 elements that come in there. One is the production, wherein we heard about what all's happening around renewable and all of that. Second is transportation, which unless you have a very well spread out production and consumption happening close to that kind of network, the transportation costs are also high. Third is the hydrogen refueling stations, which again the costs are quite high right now. And at least in number 2 and number 3, both transportation as well as refueling, a lot is also dependent on what sort of scale we pick up in the rest of the globe also. And fourth and very important is the fuel cell stack that goes into the vehicle. There again, price is expected to drop exponentially, but when the volumes come up, not just in India, but rest of the globe also, and that's going to take it 7 to 8 to 10 year kind of time horizon. So given this thing being there, though it is very much carbon neutral if you're looking at green hydrogen, but for the person who's using it, that is the truck operator, it's about cost per ton kilometer. So in the interim, LNG would give a better alternative to that user. Therefore, the transition would go LNG, and then ultimately could go to fuel cell once all of these things are sorted out. Also from our perspective of the competitiveness of the industry today, LNG, a lot of the stuff is produced locally. But that's not the case right now in terms of fuel cell vehicles. So that will also take some time for localization to happen, so that the competitiveness of the industry, especially the automobile industry, which is one of the leading industries of the country, can also be built over a course of time. So I would see it more as LNG and then going to fuel cell rather than a leapfrog.
Thank you. So great, thank you for those comments. And I guess here basically what you're saying is hydrogen promises a lot. We heard 111, now we are certainly hearing fuel cell vehicles, and that's a good promise to have. But in the interim, until that promise comes true, LNG is perhaps a good answer that is already available. So I think with that, we've come to the end of this session, and I would like to thank the panelists for an extremely engaging discussion and bringing their wide perspective onto this. LNG is a very wide field. There were still areas we couldn't cover due to paucity of time. Shipping, for instance, is very interesting, but we couldn't talk about that. At the same time, some great inputs and suggestions. My takeaways, essentially, LNG is certainly a bridge fuel, a transition fuel, gas and LNG, and they have a very strong role to play in transition to a net zero world that India is going to go to. We just need to make sure that we understand the market conditions and we have the investments coming in, importantly, to continue to support our journey in this. With that, I'd like to hand it back to ET for concluding the session, and thank you everyone for listening.